What is going on, guys? I hope you guys are having a wonderful day, and today we have a great video. This is going to be an awesome video for you guys. We are talking about stock splits. So there are two stocks that we are going to touch on in this video that have stock splits coming up, and we'll get into that. You'll get to see the two companies that we're going to talk about. One is a company that I personally do own, and I will let you know when we get to that point. The second is a company that I do not own, and honestly, I'm not really looking to own in the future, and that's, a company that a lot of people out there have been very interested in over the last 2 years, and they're kind of trying to get the hype back, is at least the way I'm looking at it. So we're going to go over what is a stock split. We're going to go over how this is going to affect these two companies, and basically we're going to look at the valuation of one of these companies and where it kind of stands, and then what the stock split might do to the stock price. So overall, I hope you enjoy the video. If you do, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. So recently there's been a lot of stock splits in the market. We have seen Amazon go through one, and now we're seeing this other large company go through one. And I'm just going to say it, we're seeing Google. So Google is going to have a 20-to-1 stock split, which is massive. A lot of companies do 2 to 3, 2-to-1 or 3-to-1 stock splits, and Google is doing 20-to-1, and that's what we've seen even out of Amazon. Amazon is all the way down to $100 now, and they were around a $3,000 stock. So it's crazy how much these stocks have ran up over this bull market that we've had over the past kind of 10 years, and now these companies are finally deciding to hit a stock split and throw it out there and basically get their stock price back down to around $100 to $200 mark. So what exactly is a stock split? A stock split is when a company increases the number of shares outstanding to boost the stock's liquidity. So basically all that means is that a stock is going to split into a certain number, go from 1 share to, let's say, 20, right, in the case of Google. And all that is doing is that is allowing more investors to be able to get into the stock, right? If you have a stock that is sitting at $2,000, it can be difficult for your average investor, to basically keep a balanced portfolio and be able to purchase shares of a company like that, right? If you only have a $10,000 portfolio and you have to pay $2,000 to get into Google, it's hard to stay diversified. So with that, these stocks split down, and basically when they split down, they split the stock price, they will become cheaper, and that allows people to trade more options against the stock, purchase more shares of the stock, basically what have you. So that's overall increasing the liquidity of the stock. What's important to understand is although the number of shares outstanding increases, there is no change of the company's total market capitalization, as the price of each share will be split as well. So that is basically what I'm laying out. And we'll go into an example here with Google, basically where the stock would be at right now if it's split by 20. And we'll take a look at that here in the next portion. The last thing that I have highlighted here is a company elects to perform a stock split to intentionally lower the price of a single share, making the company's stock more affordable without losing value. So that's what I touched on, right? It's a lot easier to trade options, right? If you're going to trade options on the stock, it's a lot easier to do that if the stock is $100 versus $3,000. So that's one simple example. Like I said, the other thing for longer term investors, right, to keep a balanced portfolio and stay diversified, they need shares to be lower, because it's hard to add to a portion when a small 1 share could basically increase your portfolio vested, how much you have vested in a certain company by a significant amount, 5, 10, 15%. So that's important to basically get these smaller investors interested in your stock and keep them interested. So as I mentioned there, today in this video, we are specifically and mostly talking about Google. We'll get into that other stock at the very end that is going through a stock split, because they have a very interesting circumstance around them. But Google we're looking at, and right now they're at $2,387. So if we jump over here, basically what we're going to do, this is that example that I was telling you about. So the stock is going to split by 20. So if we look at the current price of $2,387, and basically all we do is simple math, we divide that by 20. So when you divide that by 20, you're going to now have in your account, currently I actually only own 1 share of Google, and I basically will receive 20 shares now. I will have 20 shares in my account, and they will be worth $119.35. So these two numbers are equivalent, right? When I own 20 shares of this, at $119, that is equivalent of owning one share at $2,387. So hopefully that makes sense. If it doesn't, do the math a couple times, do it on a couple different stocks. Look at Amazon stock because they've already done their split, and it should start to make sense of what exactly is happening and how you're not gaining any value. You're basically just maintaining the same value. What's interesting in Google's case is they actually announced their stock split back in February. So this is back before, we've actually seen a lot of the downturn in the market, right? The market was trending down at that time, but now it's significantly lower than it was when it was back in February. So they announced this stock split, this 20-for-1 stock split back in February. And now, the market's lower. They're going to have a little bit lower price than they probably initially thought, but it's still a decently priced stock. What companies try to avoid doing is try to avoid basically driving their stock price so low that it's like a $20 to $50 stock, because then if there's a random downturn, like a 50% drop in their stock price, then you start getting into like penny stock territory where your stock just appears cheap. It just gives off the feeling of being cheap. So a lot of companies, you've seen it from Apple a couple years ago when they did their 5-for-1 split, they try and maintain that like $100 to $200 mark, because at that point it's affordable, but it's also, has a higher value, and people kind of psychologically interpret the value of the stock as being higher. The other thing that I've noted here, so this stock split will actually take effect July 15th. So this upcoming Friday, we'll see that stock split hit, and you'll see the price, like I said, drop down to around $120. So that's important to note that, if you open your brokerage and you see the stock down at $120 now, it's not because Google fell from $2,300 all the way down to $120. It's still the same value. It's just, a different price tag on it. So if you've wanted to buy Google for a while, but you just didn't have the money or didn't want to put the money into it, that'll be an excellent time on Friday. The issue is, right, you see a lot of times these stock splits will happen and the stock will either run up right before or run up after. So you could see, a 5% move in a stock like Google just because of the stock split going on. And the last thing that I have highlighted on here, so just to confirm, so this is an article by The Motley Fool. Basically, they said the stock will be around that 115 mark. So they're just taking this $2,300 and basically, again, dividing by 20. One of the last things I wanted to do for Google stock is I wanted to take a look at their PE ratio and how the company PE ratio has basically changed over the last few months, because I haven't done a video on them basically in a while, and I like looking at the PE ratio and seeing how the company is valued and basically if it's undervalued, in my opinion. So right now what we're seeing, they have a forward PE ratio of 19.16, and what I always like to do to find a comparison is I like to basically pull open a long-term chart of the PE ratio and where it's been over the last 5 years. So we can see back here in 2017, it was all the way up at 60, which to me is probably a very high valuation. But more recently, we've seen anywhere from 23 all the way up to 31, and it seems to kind of sit or want to sit around like a 27.5. So what I like to do is I like to take that and do a little math, and we can come up with basically a price target of our own of where we think the stock could go. I think Google, under good market conditions, or basically under normal market conditions, I think could easily be 25 to 30 for its PE ratio. Under great market conditions, I think it could easily get over 30 if money's cheap and things that we've seen over the last couple months. If we see that happen again, I think Google stock's valuation, it could command a higher valuation because it still has a decent amount of growth in front of it. So what we're seeing, right, these are my predictions. So I think it could have a potential PE ratio of 27.5, again, based off that last chart that we looked at. And then the current PE ratio that we're seeing is 19.16. So when we take that, we can basically, like I said, do a little math and come up with a potential price target. So we have a potential price target. If Google stock right now, with its earnings staying the same and everything basically staying the same, if all of a sudden it went to a PE ratio of 27.5 instead of this 19.16, we would see a price of $3,400 $126. And just to make that little change here quick, we're going to see what it would be. So it would be $171.30 basically after the split. And that actually equates to a 43.53% return. So overall, a very great return if Google were to make it up to, a more normal valuation. Last thing before we get into this other stock that we're seeing have a stock split here come up. And that is basically, what do analysts think of Google stock? So we have Google stock here. We have almost 38 analysts saying that it's buy, 8 saying overweight, and 2 saying hold. So overall, basically a lot of positivity around this stock from analysts. Again, normally you have someone down here just sitting down here saying, oh, we think it's a sell, because they just, are hating on the stock. But what we have with that is an average price target of $3,139. So what I always like to do is basically come back over here and throw it in this spreadsheet quick and see what that equates to in return. So overall, their estimate is a little bit lower than mine, but it's still a 31.5% return. And again, let's just look at that price after the stock split. So we divide by 20, we get $156.95. So overall, basically all the analysts are positive on this stock. I personally think it's very undervalued. I might add some shares. The only reason I haven't is basically like what we talked about in the start of the video, is I don't want to over leverage myself into Google. So I haven't been buying, at a $2,000 price tag that it has on it. But now as it gets down to like 119, I could throw, $500 in, in a month, and basically, average my way into it a lot easier and feel better about, owning the stock. All right, so what you guys have been waiting for, the other stock that we have that is announcing a stock split, is GameStop stock. So they are doing something a little bit more normal, which is a 4-for-1 stock split. And what that means for the stock, right? So they are currently at $128.54. So we're just gonna do 128 divided by 4. So it's gonna be now a $32 stock. And in my opinion, the main reason that GameStop is doing this is I think they're trying to basically get the hype back. And we've seen this over the last couple of days. When they announced this split, the stock spiked up. They got a lot of hype back into the stock. And really what this means for the stock, having a $32 price tag is going to allow for a lot more options trading. And that's what got people into trouble, or made people a lot of money, a few people I'm sure, back when the meme stock craze was going on. So I think they're basically trying to play this game of getting their stock price back lower to basically get hype around the stock. And in my opinion, I don't love it. I am not a fan of GameStop stock just because I don't like the business behind it. I don't really know where they're going long term. I don't think they have a great vision of where they want to be, and it seems like they've just been playing a lot with the hype. So in my opinion, I do not own GameStop stock. If you do, no harm, no foul. It's probably fun to mess around with and fun to trade options with, and if that's your thing, then so be it. But personally, I am a lot bigger fan of Google and think Google is going to crush it in the long term. So overall, I hope you enjoyed the video. If you did, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. And as always, have a wonderful rest of your day.